But we have the pharma sector that we want to put the focus on. Aditya Khemka is fund manager at InCred Healthcare Portfolio PMS. He's joining us right now to take some questions. Before I get to pharma, Aditya, good morning. Thanks very much, Prashant this side. I just want to get a quick word in on hospitals, something we've discussed in the past as well. It gave you an opportunity, didn't it? Gave all of us an opportunity with that correction. Maybe that opportunity is still there, but stocks have come up nicely. Looking at Narayana, Max, and a few others as well. From the recent lows after the the court coming in and saying, telling the center to standardize procedure rates, etc. There's no resolution, but it's kind of pushed onto the back burner now, and business fundamentals are back in focus. Just wanted your thoughts there, and what's your pick?
Yeah, so if you see the court hearing, I think the court hearing is scheduled for 10th of April, where the hospital industry is gonna discuss this issue with the court and basically try to justify to them that standardizing procedure rates just doesn't make sense because the cost structures are so very different for each hospital unit. So if you have to do standardized pricing, you have to sort of take the cost structures of each and individual hospital into account before you can think about what kind of rates they should charge. So I think that is where the main debate is going to be between the industry and the court, and we will see what the outcome is. From our perspective, we believe that most of the hospital stocks are still fairly overvalued. Yes, they did bounce back, but I think if you look at the historical valuation and the valuations of hospitals in the regions, countries like Taiwan, Brazil, Thailand, Russia, Indian hospitals are far too expensive. Majority of them, not all of them. And hence, I think the hospital sector will see some price correction or time correction over the next 1 or 2 years. And then maybe we'll have an opportunity to invest more in hospitals. From our portfolio standpoint, we just hold one hospital, that is Healthcare Global. And we hold it simply because it offers a better risk reward than most other listed hospitals do.
Okay, all right, got it.
Okay, so that's the view on hospitals as things right. By the way, your pick in the space is which one, Aditya?
Healthcare Global.
Healthcare Global. By the way, the deal there is happening, right? Aditya?
Yeah. So
is it your call predicated on the deal?
Not really. It is a profitable hospital chain. It's a hospital chain that has generated free cash flow for the last decade, every year for the last. And I think it was undervalued. So if the deal happens, we'll probably get a price uptake, which will be a cherry on the cake.
And do you think one of the by the way, we've had our hospitals come on the show and we've asked them whether they're interested. Obviously, no one really committed to an answer one way or the other. But do you think this will go to one of the sort of listed entities? Any thoughts at all?
So look, it will make a lot of sense for one of the listed entities to buy hospitals, oncology being a space where most of the listed entities have struggled to build a sizable presence and where most of them want to build a sizable presence. Hence, it will just make sense for one of the listed entities to pick it up. But again, it totally depends on how negotiations go, how due diligence goes, and what kind of valuations they are willing to offer, and what kind of valuations the exiting PE firm is willing to accept.
I wanted your thoughts on diagnostics, because the one thing that is working in the diagnostics company's favor is valuations, right? Compared to historic valuations, the stocks are trading at very cheap valuations right now. Do you think a case can be built for buying some of these companies?
No, absolutely. I think one of the pockets of healthcare where we are most bullish is diagnostics. The simple reason being that the stocks are fairly below their historical averages in terms of valuations, BTV, EBITDA, PE multiples. And there's a significant recovery we are seeing in the sector happening for the past 4 or 5 quarters. I think the broader investors have just neglected this because they have been disappointed post-COVID, the revenue declines that happened in the sector. But in our view, that was always expected. COVID revenues are never going to be perennial revenues. As well as if you look at the last 12 months, for diagnostic sector was not good because it was a bad acute season in India. And hence the volume growth for the diagnostic companies was not to the level it generally is, because in India, we generally see a strong acute season. So this year we expect the acute season to be normal, which means YOY growth in terms of volumes will be great for diagnostic companies, and hopefully that will reflect in stock prices.
All right. Hi, Aditya. Good to see you. What about the pharma pack? Where do you see opportunities out there?
So within the pharma pack, unbranded generics, which is your US, European business, generic business, we don't have a very bullish stance. We feel that most of these companies are benefiting from one-off cash flows, one-off product opportunities, which may be 2-3 years, or maybe in some cases 6-month cash flow also, and that's getting the full PE multiple, and hence these stocks should probably correct in the next 2 to 3 years. It might be time correction, absolute correction is that difficult to say. On the branded generic side, we remain optimistic, we remain bullish because the secular growth in the Indian market will continue. And again, there the acute season this year should drive volume growth over the low base of last year. So that should reflect in valuations this year as well. On the API side, we are not so bullish on the generic unbranded API because there again, the competition is high, pricing is bad, and we don't see a significant return on capital happening in those companies. On the custom synthesis API side, we are very bullish because we see the China Plus One playing out. We are seeing more and enough evidence of the global pharma majors trying to diversify away from their reliance on China, and India being the second most favored destination. We feel that there's a lot of scope for these API companies in custom synthesis.
All right, we'll let you go on that note, Aditya. Thanks a lot for joining in. Appreciate your time here.